In today's currency report, the dollar is weaker against the euro after yesterday's bout of strength that was fueling the decline. Profit-taking and speculation the Fed will not boost interest rates this year. Let us take a closer look at the action right now. We do have dollar weakness against the euro continuing right now, but the dollar also showing some weakness against the Japanese yen. And let's take a look at euro-yen right now. The euro is showing some strength against the yen at 133.58. For more, let us now bring in Stephen Gallo, head of market analysis at Schneider Foreign Exchange in London. Welcome to Bloomberg News.
Good morning to you, Mark.
One of the things that people are looking at, as we talked about that dollar decline today against the euro and the yen, speculation about what might be happening here in the U.S. when the Fed meets. Any sense of what we might be hearing out of the Fed tomorrow?
Well, at the moment, Mark, I mean, one of the things, obviously, that's on the market's radar screen is the fact that although the Fed announced a huge program in March to buy treasuries, obviously it increased the size of the GSEs and the mortgage-backed securities it would be purchasing, yields have not performed like the Fed would have liked. They've actually risen in the longer end of the curve. And this poses a problem for the Fed. If mortgage rates are going up, obviously that could potentially bring the risk of more financial instability further down the road, and if yields are going up, that could potentially thwart the recovery. So, overall, we think that the Fed's message tomorrow will be one of somewhat optimistic over the general stabilization in economic indicators, but also more tentative in terms of what's coming ahead. It's going to be bond market friendly, and potentially, I would say, I would not rule out an increase in the size of the QE program.
You're urging clients that need to do short-term exchanges right now to sell their dollars at these levels. Why?
Yeah, potentially ahead of this meeting tomorrow, we're telling clients, if you have any dollars to sell, it might be good to consider selling them at these rates, simply because, like I just said, we cannot rule out that the Fed will be more aggressive on the QE front to try and limit some of the rise that we've seen in bond yields.
But you do believe that the dollar is
potentially...
I'm sorry, go
that
ahead.
Could potentially be a net negative for the dollar as well.
But you believe the dollar is still on the defensive, correct?
Yes, to a large degree. If you're looking at euro-dollar specifically, we expect the euro-dollar rate to seek new higher ranges in the 145 to 150 area in the second half of 2009. That largely stems from the fact that the QE program that the Fed has adopted might stem debasement fears for the dollar. It also has to do with the fact that we see some fiscal risks on the fiscal side for the United States over the medium term. So all this has to play out over the next 6 to 12 months.
That short covering in the pound, do you think that was responsible for the recent rally that we saw?
Yeah, the sterling is a recovery play, Mark, and if you believe that we are headed for a V-shaped recovery, then sterling is certainly one of the currencies to buy. The problem, obviously, and our view is backed up by the fact that we don't think we're headed for a V-shaped recovery at all. Certainly speculators, because sterling underperformed so heavily during the fourth quarter of 2008 and Q1 2009, certainly speculators were incredibly net short sterling when the rally began about a month ago. But the same is going to be true for the downside, because speculators have switched their positions so aggressively in recent weeks. If there's any bad news that comes out of the UK, the move to the downside is going to be just as aggressive.
Right. And Stephen, in about 15 seconds, your thoughts on the yen, not a likable currency?
Well, in terms of how it will trade against the non-QE and commodity-linked currencies, no. But in terms of how it will trade against the dollar over the next 6 months, we don't see a whole heck of a lot of movement there in the dollar-yen rate. We think that rate will gradually edge to the downside as the intensity of the dollar pullback picks up in the second half. But further out, we don't see much strength in the yen versus the dollar.
And Stephen, we're going to have to leave it there. Stephen Gallo, head of market analysis at Schneider Foreign Exchange in London. And you can find all the latest currency numbers and stories on our website at Bloomberg.com.